Yeah, it should be fine. Yeah.
First things first, I owe you the finish to chapter 4. So we got through everything in that chapter, really, except down to the last little bit of the nuanced details between the duties that are owed to a client and the lesser level of duties that are owed to a customer. So just to revisit, we owe that full range of care, obedience, loyalty, disclosure, accounting, and confidentiality to our clients, whether they're a landlord or a tenant, a buyer or a seller, whether it's residential, commercial, industrial, doesn't matter. That full range of duties and everything they can possibly mean, that's a burden that's on us, that's our professional responsibility. So then, what is the difference when I'm sitting across the table from somebody, they're not my client, what do I owe them? Or what do I owe someone who walks into my office, or someone who is inquiring via email or something like that? What do I owe to a customer, somebody who's looking for services, or perhaps somebody who signed the disclosure and they're functioning, or I'm functioning under ministerial acts, and I have to do things for them? Or perhaps somebody I am involved in but have never even met. A seller on a house when I'm going around with a buyer and just setting listing appointments. I'm interacting with them, they're seeking services, they're seeking me and anybody else who's licensed and registered in the MLS to sell their house, but I've never met that seller. That would be a customer. What do I owe them? So my suggestion is that we kind of walk back through those same duties: care, obedience, loyalty, disclosure, accounting, confidentiality, and just compare them one at a time to see what differences there are. So care, we define also as reasonable skill in care, diligence in care, that level of expertise that an agent has, that fiduciary duty that makes us superior beings. The law holds us to a higher standard. Do we owe that? Do we owe reasonable skill and care to a customer, meaning a consumer who we are not representing at that point in time, but who is seeking or who might be interacting with us on some level or basis? Got a yes, a couple of nods, heads, right? Definitively. In fact, it would be a clear case when someone you're not representing would file a lawsuit against you or your broker if you fail to live up to reasonable skill and care. The example of you take two listings at the same time, very similar houses, you're extremely busy. You note in your mind that one of them has a brand new roof, the other one probably could use a new roof, and you put them into the MLS backwards. You know, it's got a newer roof and it doesn't, and you just don't pick it up at all during the listing. Completely accidental. Maybe it's negligent misrepresentation, maybe it's just negligence, whatever it might be. That's a reasonable skill and care violation. That's not something you should err on. Another good example is one related to zoning. We haven't gotten to zoning yet, but this hopefully will give you a sense also of how different concepts in the course tie together and come back to your duties as an agent. So zoning is the government's ability, particularly local level, to regulate property use, what can be done with a particular piece of property. So what happens when someone comes to an agent and says, I'm looking to buy a house, but I also want to run a hair salon out of my home. Just want to put one chair and bowl in the basement, and I want to operate a business there. Agent takes them around, shows them property, and they purchase that property, and sometime later go to apply for their business license and find out no business can be conducted out of the house. Now that's for your client, but that would be, again, a reasonable skill and care violation. So that's the kind of thing, that higher level of duty that we're held to. So that's owed to everybody. Whoever in the deal, whoever you're touching base with, whoever relies on what you say or do, if you fail them and they're damaged because you failed to rise to the level of the average real estate agent's proficiency in that specific circumstance, you're subject to lawsuit at that point in time. Accounting, just to kind of jump down because we can kind of get past a few things here. Obedience, you're not going to follow their direction. If they're not your client, they're not going to direct you. Loyalty, that's what you owe to your client. You're not going to put the interests of a customer ahead of your own. If you did, they'd become your client. Disclosure we've talked about a little bit, but let's go back to this idea of accounting. We talked about it the other night, right? You've got two kinds of accounting functions, paperwork and money, or the earnest money or escrow deposits. So when it's paperwork, thinking about a contract signing, you know, a sales agreement, when the agent sits with the buyer and fills it out the first time, that's then going to get handed off to the listing agent for them to look at. At some point in time, if the deal goes together, one party or the other, either the buyer or the seller, is going to be the last ones with that contract in their hands. Whichever agent has that contract, they owe timeliness to both parties, their client and the customer. Once the parties have agreed, the only thing that makes any sense is to get copies to everybody, including attorneys, lenders, whomever is involved now in getting the deal closed, and do it in a timely manner. So you can't sit as a real estate agent and say, well, I gave a copy promptly to my client. What do I care if the other party ever gets a signed copy? It just doesn't make any sense. So you owe accounting to both parties. So if you fail to timely deposit earnest money and it damages not your client but the other side of the transaction, they would have the right to sue you and your broker for that inaction or lack of timely action. All right, so those are really the two main things that are, you know, clear cut, that are the same on both sides. Disclosure is only the same in the manner that I described it as a passive duty. Whatever duty to disclose the seller had, you have the same duty the seller has, and therefore you owe that duty to the buyer, who might be your customer rather than your client. So in that regard, disclosure, you know, of things that you're aware of are your obligation as well. Fair and honest dealing is the broad brush category that covers everything that's entitled, the customer is entitled to from a licensee who's not representing them. In other words, you can't lie to them. You don't have to tell them everything you know. There's a big difference between being honest and being forthright. So to use the probably fictitious example of George Washington chopping down the cherry tree, if George chops down the cherry tree and runs in the house and says, Mommy, Daddy, look what I did, I just chopped down your favorite cherry tree, that's not really honesty, that's being forthright. Honesty is when the parents say, George, who cut down the cherry tree? And he says, I did. So it's important to understand that when you have duties to your client, which include confidentiality and your representation of them to advocate for them and get them the best deal that you can, no matter what their position is in the transaction or what they're trying to accomplish. That is not inconsistent with the idea that you have to be honest with the other party. There are times when you can just decline to answer something. You can ignore a question that's asked. Things like, why are they selling? You know, do you think they would take an offer of X? Those kinds of questions that you can't and don't want to answer, you don't owe that, you know, kind of information. So again, you can't lie. And I think as real estate agents, as I was trying to point out the other night, in my example with the school district terminology, here is another case where actions by a real estate agent can mislead parties with whom you have, without thinking about it, no real relationship with. So an example, let's say you're working with buyers and they are out looking at homes in the $750,000 range. You're showing them things between high sixes and mid sevens. You've looked at their financials, you've got the pre-approval letter from the lender, they've told you specifically what they're willing and able to do, and you know they are capped. There is no way they can pay, they can buy a house more than $750,000. Which, by the way, is kind of fun. One of the things that can be fun about the real estate business is showing stuff that's out of your own class. Being able to say, well, I can't afford this, but you know, it's kind of fun. I've worked with agents on different levels in the past who set minimum levels for themselves. I'm not working with anybody under $1 million, for example. One woman that I work with here locally, that's her threshold, still is, I believe. That's just her goal, and we'll talk about setting goals, etc. a little bit later tonight. But you're working with this couple and you're driving through a subdivision, showing them places, and off in the corner there's a home for sale that's just a gorgeous house. You know it's listed at about $1,250,000, and they ask you, can we see that house? What's the harm, right? I mean, what's the harm in calling up the listing agent and saying, oh, you know, would like to see if we can show the house. Do we show it on short notice? Do we need, to make an appointment? What would be the harm in doing that? Say it louder.
Misrepresentation.
Well, what are you misrepresenting? Who are you misrepresenting? What? Well, no, you're not really. I'm not thinking you're misrepresenting to your buyers. They know what they can afford. They just want to get a free tour of the house. And it is a cool house, and it would be kind of fun to go and see. But you're on the right road. But who are you misleading?
Yourself.
You're misleading the seller. Because all the seller's going to know from their broker is, hey, we had 3 showings this week. And only you will know that one of those 3 was complete nonsense. Right? So, just by saying, ooh, wouldn't it be fun to just traipse through somebody's house, you can mislead somebody. That somebody is somebody you're never going to meet. I argue that they're a customer. And you owe them fair and honest dealing, which means not misleading them by showing stuff when you don't have legitimate buyers. Now, there are other courses of action. You can talk to those, your clients and say, you've got retirement funds or anything else you want to cash in, you want to sell your boat, your second house, whatever. And if there's a chance they could buy that place, that's a whole different picture than the one I painted earlier. Or if the numbers are closer and you think the house really is, maybe it should be within their striking distance. Other thing you can do is you can call the listing agent. Maybe there's an open house coming up, a public open house that they can attend. Or even better yet, ask the listing agent. Just tell them, look, I'm showing in the area. I've got a couple that are really awesome. I don't think there's really any way they can afford that house. Any chance I could take them through it anyway, just so they could see, what the crown jewel of the neighborhood or whatever. And if that listing agent says, yeah, no problem, that is no longer your concern, right? Because now that's between him and his client. You've now informed him what you're doing and what's going on. Maybe the house is empty. Maybe he's just thrilled to have any kind of activity. Maybe he's violating his duty to his client. Again, that is not your problem. That is for him or her on the listing side to manage that. But again, just an example of be a little bit careful once you're a professional to recognize the actions you take, project to other people what they think they're seeing. And if it's not, then I argue that that could actually be a violation of fair and honesty. It happens all the time. But you have to, really work at recognizing you're making this transition, going from being a consumer to going to being a professional. And it happens very gradually, night after night. And the real linchpin is when you pass the state exam and get sponsored. Bam, instantly, you are now professional, held to a higher standard. There won't be any trumpet blast going off. There won't be anything obvious other than, ooh, look, I'm there. Right? So you have to begin to function on a higher level. Questions about any of this at all? Yes.
Wouldn't you feel that the house is overpriced and you have proof that other homes around the area are sold less?
Yeah.
Would you be able, maybe show your clients and talk to the agent?
In that case, I think yes, but I would think the numbers would have to be closer. So let's say the house is listed at 900, if you think it's really should be worth 750. Yeah, if you've got a professional opinion, that's a different scenario than what I painted before. Anything that, even with a bit of a stretch where you think it's reasonable or within a range, then I think that's normal. First of all, you wouldn't limit your showings to houses at 750,000 because the presumption in the market is all home prices are negotiable, right? So, that's kind of the way we work. So if somebody's asking 775, there's a chance you could buy that for 750 or less, depending upon what the market is like. So, and that's something you'll have to figure out depending upon where you work and that sort of thing, what the economy is like. So I don't mean to write a hard, fast rule that says if they're capped at 750, you can't show a house at 751. It's not that cut and dry. But between 750 and say $1.2 million, there's probably no way. Well, last thing, I'll forget this. Just remember that agency relationships have to be disclosed in writing in Illinois. So the next time we get together and we talk about agency agreements, particularly written agreements for both listings and buyer agency, remember that no matter what kind of agency you have, written express, oral express, or implied, the name of the designated agent must always be disclosed in writing to the client. So that's an obligation, and that's an obligation I think a lot of brokerage firms fail, particularly if you have an oral or an implied buyer agency. one more time. Any other questions at all about anything at all about out of chapter 4? All right, well, let's move into chapter 5. This is the same thing we looked at before. I don't know why I leave all this exciting action in there, it's just a copy of the same slide. So again, it's there if you read up to the notes, but that's the exact same thing we put up before. I guess I can reiterate this cooperation and the term that goes along with it. So cooperation, as I mentioned the other night, is the model that the National Association of Realtors presents, and this is the way all of their associations work. So in residential agency all across the country, this is what you're likely to see, where by placing a listing into the multiple listing service, it becomes a contract between the member agents. And it's a guarantee of cooperation. That guarantee of cooperation tells these agents down here that, yes, we will let you show the property. That's what cooperation means. Yes, you may show my listing. That's all that cooperation means. Cooperation in and of itself does not guarantee compensation. Now, when you're talking about a multiple listing service, the multiple listing service probably takes care of the compensation part of it also. So it's not only a contract between the listing agents and all of the other licensees who are members of the MLS that, yes, I will let you show this listing, but there will be specified in the listing agreement what the cooperative compensation is. So when you work in the residential business, all you have to do is look at the listing in the MLS, the agent view of the listing, at least locally here, this is exactly how it works, and it'll tell you, here's what you're going to get paid in a percentage, in a flat fee, whatever, however it might be calculated, what your broker's going to be paid for the sale of this place or the lease of this place. When you get outside of residential or anything actually that's listed in the MLS, so if it's not listed in the multiple listing service, there are no guarantees of cooperation. And even if the agent tells you that they will cooperate with you, they have not just committed to pay you a commission. So when you show property of any kind for lease or for sale that is not listed in the MLS, you need to make sure you are going to get paid. Ask for, a copy of the broker's compensation policy, or just ask them to confirm by email what the cooperative commission is. I have seen brokers go all the way to the closing and say, what do you mean I'm not getting compensated? You said you would cooperate with me. They had no commission agreement because it wasn't in the MLS. I had the good fortune of being the listing agent on a commercial real estate transaction where I had sent the buyer's agent a letter at their request during the contract negotiations that said they would get paid a 3% co-op commission. They showed up, apparently that broker left the firm. They showed up at the closing, the only thing that they had at the closing was an invoice, and their invoice was for 2.5%. So I'm the only broker at the table, and I was actually also the president of the selling entity. So of course I had disclosed all that, but there I was, acting both as the seller, in effect, and as the listing broker, saying, well, where should that extra 0.5% go? I had a contract with the seller that fixed my fee, and the buyer's agent effectively said, we'll take a 0.5% less than what you promised us because their bookkeeping was messed up. This was quite a few years ago, and yes, I pocketed the other 0.5%. And that deal was around $1.2 million and something. So that was six grand. Very happy to have that. So those agreements matter, and making sure you have them, and then making sure you collect them properly. Again, if you're working residential in the MLS, it's all taken care of. It's automatic. The only thing you'll ever need to do about that is be able to calculate it so you can plan how you're going to pay your bills next month when you close, and also make sure you enter the co-op commission properly when you're the listing agent, so that the buyer agents can know what they're going to get paid.
So if you see like a vacant piece of property, or like a property that isn't necessarily being represented by somebody else, like a buy owner, you have some clients that are looking for a restaurant again, for example, you find a place for them. If you don't agree with the owner of that property or something prior to that, you're not going to get.
You they're not obligated to pay you anything. There is no inalienable right to collect a fee for selling something unless you ask for it, negotiate it, and pin it down on it.
But I mean,
and
but
get it in
if
writing.
they have the money, then how are you gonna like get that bypass?
If you don't ask, they get compensated, they're not gonna owe you anything, it's just that simple.
But you're bringing the buyers.
Doesn't matter.
But don't you have agreement with the buyers? That they-
Well, that's a different discussion. Getting paid by the buyer is a completely different discussion than getting paid by the seller.
Okay.
But that's a
Commission on the other
perfect
side as
question,
well.
it's a perfect question for chapter 6, and one that we need to explore, because those kinds of weird things happen, and sometimes agents are caught unawares for that too. But a seller wouldn't owe you anything unless you had an agreement that said so, which you have here, because the seller tells the listing agent, yes, we'll pay the entire fee, and they put the share in the MLS that the buyer's agent is gonna get paid. So you know not only that you can cooperate, in other words, you can show it, but also you know what your percentage is gonna be. What you won't know as the buyer agent is what this broker's compensation is. You'll only know the piece that's gonna come to your firm. And the even better example there, Daniel, to kind of pin that down to this here is, let's say the seller is represented, you know, they do have a broker, but it's not in the MLS for whatever reason, commercial property. That other broker also would not owe you compensation. Even within the industry code of ethics, the National Association of Realtors Code of Ethics, which they update every year, Realtor members are obligated by industry standards, not by law, by industry standards, to cooperate with one another. But that does not mean compensate one
But I
another.
mean,
That has to be
the
agreed
deal-
to
you say the
separately.
deal can't move forward unless they agree.
To what? To be compensated?
For you to be compensated.
There's no way that a broker would be part of a deal unless you were the principal of the transaction. So it would be very, you know, if the agreement itself says you're gonna get compensated, which does happen in commercial leasing, but really never happens in commercial sales, you would have to know that you're gonna get, that's gonna get paid. I've even seen commercial transactions, commercial sales contracts that will state that that there are no commissions owed to either broker, even though you know there are, to simply make sure there are no lien rights on the deal. And so the only broker agreements are all completely separate and aside from the contract. So again, it's something that if you're gonna do outside the MLS deals as a broker, you need to make sure you've got compensation confirmed in writing. Okay, so basically we have two classes of license that we're gonna concern ourselves with in the course. The license you're pursuing, the real estate broker, this is the entry-level license. Prior to 5 years ago, we used to have the old salesperson license. That was always the entry license. And in some states, they still call their entering license a salesperson license. Yes, we do have a leasing agent license, but we're really not going to concern ourselves with that in Illinois here for this course, because there's nothing that a leasing agent can do that a real estate broker or managing broker can't also do. A leasing agent license is for someone who's going to lease and negotiate leases and show apartments and other single-family type or other residential dwellings. So, again, you're authorized to represent your broker. The same thing we talked about last night, and we'll look at a little bit more detail again here. That's what you do as a licensed real estate broker. So you're going to be a sponsored licensee. Every license in the state of Illinois of any individual is sponsored by some other individual or entity. Your license will be sponsored by whomever your sponsoring broker is, and you'll make that choice. Something you should be thinking about now if you don't know already. The other class of license is that of a real estate managing broker. And again, I emphasize here, this is a license class. That's different than the idea that you're the managing broker of the office. Just to explain a little bit how confusing this can be, right? The managerial position requires a real estate managing broker license. What the License Act states in Illinois is that if you're a real estate managing broker licensee, you cannot say that you are a real estate managing broker licensee unless you are actually the managing broker of the office. So in my case, I'm free to say I'm a real estate managing broker because that's what I do. I manage my own office. It's just me. But I have to use that term. But if I stopped sponsoring myself and went to work for another sponsoring broker and became a sponsored licensee, I could no longer put next to my name real estate managing broker unless I was being paid to manage the office. I don't know whether you get a test question on that at the state exam. There are those kinds of questions that I think should be intended for a managing broker's exam that could show up on your broker's license test as well.
More than one manager, like multiple departments? Or
Yeah,
teams?
every office can have a different manager, and sometimes you'll have a manager and an assistant manager. And I don't know whether an assistant manager isn't really a position per se, but the way the act reads, unless you're the managing broker for the office, you cannot hold out to the public that you're a real estate managing broker. So most licensees, regardless of which license class they have, will advertise themselves as a real estate broker. You had a question too?
Yeah, so you can't say once you get licensed just as a regular licensee, not a manager, you can't tell other people you are a real estate licensee if you do not work for a sponsoring broker either. Once,
Right, you're not really licensed until you're sponsored.
right, okay.
You don't have to do anything. You can be sponsored and just pay whatever the annual costs are to stay involved in your CE or whatever. You don't actually have to be active to our way of thinking of active, but the state would consider you an active licensee because your license is out there and sponsored.
Okay, and is there a minimum time requirement before you can take the 45 hours of the additional education?
No, I think the education can be taken here. So to get your managing broker license, you have to have 2 years of licensure. So the coursework, we don't screen that. As long, we say you have to have taken this coursework before and be licensed, but you could take this ahead of time in anticipation of once you hit the 2 years to go take the test right away.
Right, okay.
Yeah, there's no reason why you can't prepare for that in advance. I will tell you, it's my personal opinion, there are way too many managing broker licensees. So many licensees are managing brokers that I doubt there's any real clamor for managers of offices if that's what you choose to do later, although you'll need it if you want to do it. But you can't open your own shop. You can't do your own thing. You can't work for yourself unless you have this managing broker license. So for those of you who envision that you're going to want to have your own firm someday, even if it's like me where it's just you, you're going to need to go down this road after at least a couple of years. And this active licensure, it says 2 years out of the last 3 where you have to be active. Again, that just means your license is sponsored by somebody. Right? Any questions about those 2 classes? In terms, other than managing an office, there's no difference between them. If you can land the contract to resell Willis Tower, what did they sell it for last year, earlier this year, $1.3 billion, you can land that contract after you've been licensed for a day as a real estate broker, as long as your managing broker signs off on your authority to rep the firm. There's nothing in the act that prohibits that. Go ahead.
So, like, before you get, like, your license for real estate, did you say that you would want to already, like, have something like a job, like, in line, or?
You should at least be thinking about what you're going to do with this.
Yeah.
The way the Real Estate License Act works is that there is no recruiting allowed of pre-licensed candidates of any kind at a pre-licensed school. So, like, for any of you, for example, while you're here during class session, if your twin sister is already a broker and you want to recommend her to everybody in the class, please don't do that here. Do it in the parking lot or con people into having coffee or something. It's one of the reasons why we can never have a guest speaker who's a licensee. The only guest speaker I've ever successfully entertained in the pre-licensed class was an association executive. Because otherwise, if a broker's standing up here, people are going to ask questions about, well, what's it like to work at your firm? And pretty soon it turns into a recruiting session. So that's not allowable. Can't be done at testing centers, can't be done anywhere where candidates might be. However, they can't approach you here, but you can approach them and start a dialogue. They don't know who you are otherwise, right? They don't know, but if you were to start thinking about, well, I was thinking about firm A or B or C, you could make that phone call on break or tomorrow and start that process.
Mm-hmm.
Once you contact them, then they know who you are and they're free to contact you back and talk with you and see if you're interested. Most brokers aren't that hard sell, but real estate brokerage firms, hopefully based on what you're seeing tonight and have read in this chapter, you'll recognize they only make money if they have sponsored licensees who are out there doing deals with mom and other people. And every licensee has a unique sphere of influence. This is marketing speak now, or sales speak. Right? You have your own unique sphere of influence, people that you know. It's a unique group that no other individual has that exact same circle of friends, family, coworkers, etc. So you have something to offer to the brokers, and actually you need to interview them. It's not a matter of them interviewing you, it's really a matter of you interviewing them, trying to figure out where do I want to hang my license when I'm done. If that's distracting, wait till you're finished with the course. But I just want you to understand that that is something you can do now. And I'm sure there are several of you in the room who already know where you're gonna go. You're gonna go where friends, family, whomever already are, logical choice. But for those of you who don't know, it doesn't hurt to be thinking about it. You do not have to have a sponsoring broker to take the test. Obviously, you don't have to have one to be in class. Once you pass the state licensing exam, you have a full year to find a sponsor and activate that license potential that lays in a passing test score. So you have plenty of time to figure it out. All right, the sponsoring broker, we started using that term already. That's the firm or the individual who sponsors all the licensees. Has to be a managing broker licensee or a firm or an entity that does that sponsoring. So at one point in time, I sponsored a firm because it was a company that wanted to hire me as a managing broker. A couple of guys who were involved in the business, one was a salesperson, one wasn't a licensee at all. And they wanted to start a brokerage firm because they were already doing accounting services and had property they owned that they were managing. They wanted to start doing management for other people. So they brought me on to be their managing broker, but they needed somebody with a high enough license to sponsor the firm, so I did that as well. So I charged them a fee in terms of being their sponsoring broker, in terms of I made them give me a piece of the ownership of the company. I didn't make them, but I wouldn't do it if they didn't. Fortunately, it turned out to be worthless in the long run, so we don't have to ask me for money. Okay, so idea being the sponsoring broker is the only entity we really are caring about in terms of the public. What we started talking about with Mom's listing, it's really the sponsoring broker. It's really that entity. That's who advertises. You do everything in that name. You represent them. Again, you'll talk like it's you, but it's really that firm or that sponsor that's behind you.
So how much interaction is there on a day-to-day basis between you and your sponsor?
You may never actually meet the sponsor, or the sponsor might be a company. So you might not think about them. The only interaction may be the forms you use and the name on the business card.
So after this class or after your licensure, you start somewhere.
Right.
What kind of mentorship are you getting at that point?
That depends on the firm. Depends a lot. So some organizations will have a training program. This is not a recruitment or idea, but Coldwell Banker, for example, has a program they call Fast Start, or Coldwell Banker University. Other brokerage firms have the same similar idea. So it's more classroom training. You go and you sit with a trainer. It might be the office broker, or it might be big enough to have their own trainer. I talked to a RE/MAX broker many years ago about starting a training facility for RE/MAX agents in the area, because RE/MAX at that time didn't have something that went across franchises. So some firms have that formally. Others will have a mentoring program specifically entitling that, like that, where you will then work under the tutelage of another licensee who's been there at that firm for a while. You make your full share of commission, for example, and the firm might pay that mentor a little bit out of your first few closings to help cover their costs. That's another example that I've seen. In other cases, if you go to work for a really small shop, maybe the managing and sponsoring broker of the firm takes you under his or her wing and shows you and teaches you everything, and you get paid normally, and they're happy just to get their piece of the deal. But the idea of your question is that's one of the perfect questions to ask anywhere you would go. How am I going to learn what I don't know? And who's going to be there to hold my hand, take me to listing, go with me to the first few listing appointments, etc. When I first got into the business, the residential business, full time, there were maybe 24 agents in the office that I went to. Great visibility, but not great agent support necessarily. Almost all of the active licensees in the office were women. And for whatever reason, I felt awkward asking to pal around with any one of them, to say, hey, can I go with you to your listing appointments? Can I go with you to your contract negotiations, etc. The new licensees who came into the office who were women did that instinctively, immediately, and they had a much higher success rate. Within about 3 months in that office, I was the top producing male there. There just wasn't anybody, there was not another male agent who was there who was really successful. The only one who was even trying it full time left and went back to teaching about when I was there about a year. So there just wasn't a good dynamic in that regard. There was no, at that time, formal sort of in-the-field mentoring program. They had the formal training, but nothing after that. For me, fortunately, I knew enough about contracts that I figured it all out, kind of made it work. But that dynamic is not something you want to just sort of stumble into when you get there. You want to ask about those questions when you
There's
first
a lot
start.
of like office politics that go along with it.
Can be. I would say that if you don't like, if you have, when you go and interview the firm, if you aren't comfortable with the person that you just interviewed, that's probably not the place for you. Because ultimately, if you have a problem or a challenge or need a shoulder to cry on, it's him or her that you got to go talk to. If you like them, if you trust them, if the name sounds right, if the location is good, if the vibe feels right, if you talk to a couple of other licensees there and they really like it, then maybe that's a good place for you. And we'll talk a little bit more as the course goes on, and maybe some more even tonight, about other things that matter to you as a licensee. All right, written employment agreement. Basically, the first broad brush here is memorize the idea that every single licensee needs to have a written employment agreement with their sponsor, period. Right? That's the way you want to remember that. Technically, that's inaccurate. But that gets you through 98% of all circumstances and should get you through the first several years of your career. So the exception to the written employment agreement is I don't need one because I sponsor myself. I don't even have a corporate entity. So it's literally just me doing business as an individual. When I file my taxes, I just do a Schedule C on my 1040. I don't have another business entity regarding my real estate agency activities. So therefore, I have no need of any written employment agreement. But if I decided to start Cliff Luxon Incorporated and use that as the licensed brokerage entity, and that entity was going to be the face to the public and was registered with the state, it would have to get licensed. And the way that would work is that I would sponsor its license and it would turn around and sponsor me. And then I would be required to have an employment agreement between the brokerage firm that I was the sole owner of and me, the individual broker who was sponsored by the firm. So the only exception here is an individual who sponsors their own selves. In that one case, no employment contract is required. Otherwise, all individual licensees have a written agreement with their sponsoring broker. All right, we went over this also mostly. I just one additional point that I highlighted here, and that is this is where the written employment agreement goes. So this is the exact same diagram we put up where this is mom, this is you, the designated agent, your sponsoring broker, the general agency agreement that we're now identifying clearly as the written employment agreement, written employment contract. There is, I believe, in the course shell a standard form. If not, I can email it to you. The Illinois Association of Realtors prints about a 2-page standard sponsored licensee kind of agreement. But it doesn't say things like what you're going to get paid or who's paying for the office copy paper or local calls and long distance calls and those kinds of things. It just has basic language that defines the relationship, the independent contractor relationship, we'll talk about in a minute, between a sponsoring broker and their sponsored licensee. But you can get a copy of that before you ever leave this course if you want. And you may find that most brokerage firms use that as the template for their own employment contracts. That's what it's always been for me in the business, at least anyway. A lot of the language is pretty standard.
I have a question. For
Yeah.
the sponsoring broker, do they have like a plan for sales and P&L too, or they just like have?
That's going to depend on the firm. You mean like what are they going to require you to accomplish in a year, or some? Some sponsoring brokers will require you to hit minimums, and if you don't do enough business, they'll warn you, and then a year later terminate your agreement. Other firms are just happy to have you. If you do a deal or two a year and that's all you do, that's fine. So if you're not sure how much business you're going to generate, or if you're curious, hey, if I only do a couple deals a year while I'm figuring out how I'm going to do this, or I'm only going to represent myself on a couple of deals a year, just ask up front. There's no sense in having a broker think you're going to show up 50 hours a week in the office or working to generate deals if that's not your plan. Most brokerage firms, I would argue, will accept agents who are going to be working part-time, basically. But there are some offices who will not. So again, it's another question to ask the sponsoring broker when you interview them, or the managing broker of the firm when you interview that office. Do you have any problem if I do this part-time? and mostly work from home, or whatever else you want to ask them. As you have questions, a lot of these should be asked of those firms. I think a family member of mine that got into business some years after I did, in fact I repped her on a deal first before she decided to get into the business. She had a 3-year plan with an office in Naperville that she allied with, and after 3 years she was kind of on the bubble, and she just decided that she was done, and they were okay with that because she, they only really wanted people who were in it seriously and trying to generate 6-figure incomes, etc. That wasn't her thing at all. Wasn't what she was trying to do. Okay, so in most cases, your relationship as a sponsored licensee with your sponsoring broker will be as an independent contractor, as opposed to being an employee. Now, this terminology means things under the federal tax code and under employment law. So, an employee is what you're probably accustomed to. A W-2 is what you get at the end of the year. You fill out a W-4, tell them how much to withhold. That doesn't happen very often in a real estate agency. When it does, it's very frequently that you're acting as a property manager, or you're doing apartment leasing or something else where the compensation is not based on commissions, but is rather based on some kind of fee. And you're treated, again, as an employee, and in those cases, you might have a salary of some sort with a potential bonus or whatever. That does happen, but for most people in these courses, that's not where you end up. For most of you, you will end up sponsored by a broker as an independent contractor. And maybe the most important thing on this whole slide is this last note that I put down here. For most of you, this is not a job. This is a business opportunity. So if your mentality is, I'm going to get a job at working as a real estate agent, you're probably already misled. As an independent contractor, you are now an entrepreneur. You are now working for yourself. I even put this on my resume. You can find my profile on LinkedIn if you have any need to waste your time or put yourself to sleep some night. And I think I have it up on there that I've been self-employed as a real estate licensee since I got my license in '97. I don't list the firms that sponsored me because to me it's immaterial. I've been self-employed the entire time. They never gave me a W-2, so therefore I was a 1099 self-employed person. So whether I worked for ABC or XYZ Realty is immaterial. And if I fill out a mortgage application and they say, how long have you been self-employed? I say since 1997. I don't say I worked for this firm, then I worked for that firm, because that's not really the way it works. So you're going to be self-employed. You're going to be an independent contractor, which means you will have the right to make a lot of determinations about how many hours you work, where you work them, means and methods of getting the job done. If the brokerage firm orders you to come to a sales meeting, you have the right to say no if you're an independent contractor. If you're an employee, they can fire your ass.
What if you're managing broker like a franchise?
Then you might get paid by a salary and bonus. Depends upon the arrangement. You really can't do both. You either have to be an employee or be an independent contractor. And the IRS does look at this from time to time. Real estate tends to be a little bit of an oddball in that the independent contractor test under the federal tax code outside of real estate is very difficult to meet. Most of you, I'm sure, have heard of Uber, and right now there's a big lawsuit against Uber by its drivers. The drivers are claiming that based upon the amount of direction that Uber gives them, that they're really employees, and if those drivers win, that's going to cost Uber a lot of money because they will owe all kinds of benefits and matching taxes and things that they haven't been paying. An employer who works with independent contractors can't tell you how to work. And if they try, the IRS may say, you're not treating them like independent contractors, you're treating them like employees. A few brokerage firms do use the employee model. And they use the employee model in sponsorship so they can tell you, you are coming to sales meetings. You will meet these quotas. You will use our systems. And if you don't, you're subject to termination the same way as if you did something else, that wasn't according to, exactly to what they wanted. Independent contractors are also subject to dismissal, but it's a little bit different test, and it's not because of exactly how, when, and where you're doing things. All right, so you got this written agreement, and the written agreement will specify what you are. It'll say if you're an independent contractor or an employee. And if you have any question at all, ask the brokers. And in most cases, they'll be looking at you as an independent contractor. It's cheaper and easier. Yes.
So then if you're an independent contractor and you're not required to work a certain number of hours, you don't get like health insurance or
Correct.
retirement?
None of that. Absolutely none of that. Even under an employee model, they might not offer you any of that. I went for a lot of years, hopefully this isn't terrifying any of you, but with a family, I went for a lot of years without health insurance. 8, 7. I just could never bring myself to write the check. It seemed like so much money when all of a sudden I had to write the check. I don't get sick, I don't get injured, I rarely need any kind of care. My plan is to just live until one day that's it. Calvin?
Now, understand that the independent, doesn't get offered health insurance. And
Right.
You just said you went through 7 to 8 years, but that's different now by us getting into it.
Yeah,
Now
you have
we
to have
get
something.
it, right?
Yeah.
Right. So there are several options. You may find that, other than going through the health exchanges, that maybe an association would offer an option. I had good friends who were self-employed for a number of years outside of real estate, and they got their health insurance through either the Chamber of Commerce or like the National Association of Small Business Employers or some organization like that. It was just cheaper to find group health. And there has usually been 1 or 2 providers who would offer some kind of group health plan through your realtor membership if you go that way. So there might be other options than just the exchanges if you go this way. But it is another thing to consider today, and thanks for reminding me, because healthcare is a big part of why you take a job like I have here. So I haven't had to deal with it. But so for those of you who do have a day job or who have other health care in some other manner, and you're planning on leaving that for this, you might want to remember that that's part of what you've got to factor into the risk and into the cost of jumping into being in business. Again, if you end up as a property manager or a leasing agent of an apartment complex, then that is probably an area where you'll get some kind of nominal pay and benefits. All right. There are certain tax advantages that I put down here in quotes, advantages for being self-employed. Right? If you make a bunch of money, is it going to be one of your goals to turn as much of that over to the IRS as possible? Well, as an independent contractor, you can deduct expenses that you cannot as an employee. So, I commute 60 miles a day to get here to and from Wavansie every time I come here. That's not tax deductible mileage. But did I mention that every time I come here, I stop by the office building that I manage in Aurora? And that I have a post office box in Aurora, and I have a bank that I do business with in Aurora? Somehow I'm in Aurora like 12 days a week. But I keep track of that mileage, and I keep track of when I'm going there and when I'm going here. That's tax deductible for my real estate activity. Got to go to the building sometimes. If it happens to be on the way, I'm going to stop. So, that's something to consider, these tax advantages. This is a little bit off the course here, but for those of you who are familiar with this idea, and maybe who are old enough, and for those of you who become successful enough, one of the great things about being self-employed in this regard is that you can contribute a phenomenal amount of money to a retirement plan. I've never quite had enough to do that. But so, for example, I think the limit, if I had an employer type 401k, which we don't get that kind of thing here because I'm already an evil state pension recipient at some day in the future. But if I had that kind of employer 401k thing, I think that's limited now to about 17 grand, something like that a year. That's the max. So if I made $10 bazillion a year teaching, I could still only contribute to 17 grand. That would be the limit. But as a self-employed person, the limit right now is like 50 something. Because you're both the employee and the employer. So you can take the employee's contribution, then you can match it, and then you can do some other stuff. Plus, once you get above a certain age, you can contribute more money. Like it's once you're over 50.
So basically, I'm sorry, so
No, no, it's
basically,
okay.
so when you're an independent contractor, you still can get 401k?
Yeah, but you set up your own, not through the company. It's called an individual 401k. So that's what I have. I have, for one of my real estate activities, if I have a really good year, I can take some of that money and put it into a 401k. But it's just me. And the whole plan is set up through me. I originally set it up through Oppenheimer. I wouldn't do that again. It was very pricey, a lot of upfront costs. But now I moved it to just to E-Trade. You could put it with Fidelity or whatever. Oh, but see, I invest in other kinds of things. Through that, I can put it into bonds, or I can put it into, something safe or whatever. And, it was just a matter of, issue of diversifying and having a sense of doing something else.
An IRA will be something different, right?
Yeah, IRA is different, you can do that anyway. And you've got choices of a regular IRA or Roth IRA. The disadvantage of that same side of it is your income as an independent contractor, you are both, again, the employee and the employer. So right now, if you're an employee, your employer pays their matching half in Social Security tax and Medicare. You will have to pay both halves of that. So, right now you're paying 7.65%. You'll pay 15.3% because you're both the employer and the employee. So there's a disadvantage on that side, but it all is contributed towards your Social Security account, and the employer side of that self-employment tax is a deductible business expense. So just something to be aware of, that there are advantages. And once you start earning any serious money, you're going to have to decide, ooh, I just got a $3,000 commission. I wonder how much of that money I should set aside for tax deposits, because you got to make quarterly tax deposits. So that's, issue here, reporting requirements. You've got to set up with both the state and the feds to make those quarterly deposits. Talk to your broker, see what they do, talk to agents in the office. When I started, a woman in the office, and just another licensee, said, I take 30% off the top of every check I receive, without regard for what her expenses were, her income was, whatever, and I followed that rule of thumb for a number of years, and it served me reasonably well. If you had all of a sudden a huge level of income one year and your expenses really didn't go up much with it, then it might not have been enough. But 30%, and then knowing that the net check really wasn't net because you had mileage and your cell phone and other kinds of expenses, promotional costs that you're going to deduct first. So for whatever that's worth, that's what was told to me, and that seemed reasonable. And that's kind of what I started with. Today, because most of my real estate income comes from a consistent management fee, I just arrived at a dollar amount I take out of my pay every quarter. Some to the Fed, some to the state, and that seems to work. Yes?
I'm confusing myself with the written employment agreement with the sponsoring broker versus being an independent contractor.
Okay.
I think, am I stuck on the terminology?
Well,
perhaps?
an independent contractor is the relationship you have, and that will be defined in that written employment contract.
So regardless of having an employment agreement, you are not an employee?
Yeah,
Based on
unless it
those-
states,
Right,
right.
unless it's based on.
Unless it states that you're an employee.
Okay.
So as part of this, I think I've got this next, yeah, there are 3 requirements to be an independent contractor, which is probably what you want to be. And again, this is different than the list of 20 that the tax code requires for people outside of the real estate business. You just have to have a current real estate license. Your employment agreement has to state that you're an independent contractor for tax purposes, and almost all of your income's got to come from production, in other words, commissions. So you cannot be an independent contractor if most of your compensation, or if more than 10% of your compensation is coming from salary. To go back to Daniel's question about being a manager, when I first got into the business, the managing broker for the office I worked for got X dollars a month as salary for being the manager, and then also got a percentage of whatever deals he closed, listing and selling them. Sometime after that, the IRS came down in some ruling and said, no, you're mixing and matching. You're either an employee or you're an independent contractor. So managers today will be one or the other, but in the past, the industry tried to mix that. So if you're an independent contractor, one of the places that gets a little funky is when one of your fellow agents goes out of town for a couple of weeks and says, hey, I'm going to Florida on vacation. Can you cover my deals? It used to be that they would just maybe pay you $10, $15 an hour for your time. You can't really do that anymore because you need to make sure that most, or if not all of your income comes from commissions. So then the question is, well, if I babysit your listings and it sells while you're gone, what am I getting? That's something you'll also just kind of sort out. I don't know that there's any perfect answer because you don't know whether deals are going to close or not close, and some deals are more work than others, but you'll have to sort that out, particularly if you're planning on traveling a lot, and if you're going to have any active business and now you're going to be in Texas for a couple of weeks, you need to have some kind of arrangement with a licensee who's here left behind to take care of those things, because as we're exploring and going to explore more, it takes a license to do certain activities, like show property, negotiate contracts, close deals, that sort of thing. So it just, again, as an independent contractor, you have to meet that. Now, for somebody like me, bless you, one of the advantages of being self-employed and self-sponsored is, oh, this is all meaningless. I'm just an individual. I don't have all of these hassles. But for the time while you're sponsored by somebody else, you need to know and understand it. And also, you may want to budget a little bit of money in your annual budget for hiring somebody else to do your taxes once you start getting this income.
But, I mean, having your business structured as far as you sort of setting yourself up to be liable for things versus having a corporation, or?
I don't think in this case it's a good question, because I think I'm liable individually as an agent anyway, and most of the deals that I'm involved in, I'm a principal. But I would not function the way I'm functioning if I had any sponsored licensees. If I was trying to build an organization, I would absolutely incorporate or set up an LLC.
Underneath you, yes.
Yeah,
That-
yeah.
So,
So for me, I don't honestly think I take on any additional liability. The biggest advantages, at least initially, to incorporating are just tax advantages. Because you're still, that individual performance liability still flows right through you personally because you're a licensee. But your question is perfectly logical. And I'm sure I'm missing some advantage that's there. There probably is some liability protection. All right, so that's pretty much that. Again, you can get a test question on that, because that's really a distinct difference than what it is in the corporate world. And the IRS is cracking down on a lot of this. And as I mentioned, it'll be interesting to see whether the Uber case, if the drivers win, whether that has any backlash on real estate. I don't think it will, because it's so different. This is an evidence, having one of the simplest, if not the simplest, independent contractor tests in all of the United States, is an evidence of the power of the lobbying ability of the National Association of Realtors. And if you're a person who, like me, kind of scrunches up with your face a little bit when you hear lobbyist, and you kind of wonder, who are these nasty people who hire these lobbyists? Be aware that the single largest member lobbying organization in the United States is NAR. It's over 1 million realtor members. So now there's another reason for you to hate me, because apparently I hire lobbyists to do nasty things around the country. But that's a fact of the business. And IAR at the Illinois state level is a heavy lobbyist of the Illinois state legislature.
There's a second.
Oh, well, because I'm a state employee, so I'm subject to a public pension someday. That's already the biggest thing, so. And, you know, of course, we all know that real estate professionals were responsible for the economic collapse anyway, so, you know. It's just fun to go through society knowing that, you know, if you really explain all what you did in the right terms, nobody would talk to you. Compensation. We know that every single dollar has to get paid through your sponsoring broker, that's real estate licensed activity, to you as a sponsored licensee. Every bit of compensation, anything of value that is received on a deal, no matter whether it's cash, electronic transfer payment, or a gift certificate, or a bottle of wine, whatever you are given as compensation by your client or anybody in the deal that's related to real estate licensed activities must go through your sponsoring broker, no exceptions. So literally, I got a bottle of Courvoisier or something from a cellar many years ago, and I don't drink. So it's kind of like, oh, that's nice, thank you very much, what am I gonna do with this? But my responsibility, once I got that gift after the closing, was to give it to who?
Sponsoring broker.
Yeah, in that case, the managing broker, because the sponsor was a big firm, and he said, oh, you can have that. And I said, well, thank you, but I don't want it, so here you go. And I have no idea what happened to that. But that kind of thing does occasionally happen. And again, that's really good test question fodder. No matter what it is, don't think of it as having to be monetary. Anything of value is considered compensation under the Act. And anything of value that you're compensated must go through your sponsoring broker. There's actually one exception here, better explored in a later chapter, but I'll just mention it. You can also get compensated for a prior deal through your prior sponsoring broker. So if you're with firm A and you leave there, but they ask you to finish the deal, you can do that. This is common in the industry, that while you're at broker B, you finish walking the contract through, you attend the closing, you continue to rep your original sponsoring broker, the money goes to your sponsoring broker, and they pay you whatever you were entitled to. So that would be the only exception of you getting paid by your current sponsoring broker. Past one under your employment arrangement there could still compensate you. It has to be clear that way, otherwise you might owe money to both your brokers, right? I mean, the deal would have to go through the two of them, that wouldn't make any sense. This wholly owned corporation option, the License Act in Illinois carves out this one exception. So when we're talking about corporations and tax benefits and liability protection, what if you would rather be operating instead of being an individual? What if you wanted to operate as a corporation? The License Act allows for this. So you may, as a sponsored licensee, set up a corporation, it's probably going to be an S-Corp, and have your sponsoring broker pay all of your commissions into that entity. Now, you must own it 100%. You and your domestic partner can't, who are both licensees, can't both co-own it. If you're both in the business and you want to use corporations, you'd have to have your own. Cannot be co-owned. You must be the sole owner. That having been said, you can use this corporate entity for anything you want. So if you already have a business and you make money manufacturing rollerblades and you're the sole owner of the corporation and you want your commissions to be paid into that, tell your sponsoring or managing broker as soon as you start, this is what is going to work for me. The corporate entity you have is not a real estate brokerage. It does not get licensed. That's not the point. The point is that the License Act in Illinois realizes that there is some tax benefit and perhaps some liability benefit to having a corporation collect the commissions. Samantha?
If you decide to gift something to your clients, you have to go through your sponsoring?
No, but you're going to be giving that out of your share of the deal. If you were planning on giving away something that belongs to your sponsoring broker, it'll either need to conform to your authority that you have within the employment agreement, like to reduce the commission in the first place, or to you'll have to get your managing broker's permission. Like a housewarming gift is very common. That usually comes out of your percentage of the deal.
Would that be tax deductible?
Yes, it's a business expense. You can rebate the commission to your client if it's a buyer. It's a little bit funky because with buyer rebates that probably has to be disclosed on the closing statement so that the lender is aware of it in most cases today. But you can rebate money back to the client, and that is also a tax deduction. In fact, on the Schedule C on the tax form, there's a line for customer rebates. So obviously that happens in other businesses as well. I don't know that I even declare them as an expense. I just don't ever declare them as income. If you get a 1099 because of a closing, then you'll have to declare the income and declare the rebate as an expense. But if you don't, I don't see why it matters, right?
What are some advantages of the S-Corp and the independent contract?
Well, to have the S-Corp down here to collect the money would be that you would not file, you would still file a Schedule C because it flows through that. You'd have a K-1. But it would be easier for the corporation to say, own your car, own the cell phone, to have certain expenses. For example, in some years, the tax code will allow for accelerated depreciation of a vehicle for small businesses. A lot easier to do if you have an S-Corp. So in some years, for example, you're allowed to depreciate 100% in the first year as a small business the purchase of a vehicle that's 6,000 pounds gross vehicle weight or higher. So you can go out and buy yourself a BMW X5 diesel for about 65 grand and write the entire thing off in 1 year. A lot easier to do that if you have an S-Corp. So if you're making $150 a year as a realtor, right, why not? You could do that. A lot easier to do that with an S-Corp down here. Again, I've never bothered. That doesn't mean that it's not the smart thing to do. I've just never gone through and done that. I've been involved in S-Corps and LLCs, but I've never bothered. Now, one thing I want to mention here, I met with some state officials about 3 weeks ago, maybe a month ago. The Act is very clear that it's only a corporation that they will allow this for. However, my understanding is they are now permitting people to use a single-member LLC instead. So if you go to do this in 6 months after you're done with the course and you're licensed and you want to set it up, just call IDFPR on the phone if the act hasn't changed and say, hey, can I use I want to do this, can I use an LLC instead? I think the answer is yes, even though the act clearly says corporation, it has to be an S corp for that. But some people prefer LLCs to S corps for whatever reasons.
When it comes to sort of all these questions about different ways you're gonna set your business up as an
Yeah.
entity, at that point, that's where the mentorship where it comes into play is.
If they can even advise you, because they may
advise
not.
you, I mean, or are you out seeking your own sort of
Possibly both.
tax people and?
Yeah, I think it's advisable, at least to budget, that you should talk to a CPA and or, probably just a CPA in the first year you're in business. And again, it's probably not critical. The first year you're getting up to speed, and so it's a couple $100 here or there. It's not a big deal. But once you start to become successful, maybe this is going to be much more significant, like what I was just talking to Tawan about, where all of a sudden, wow, it would be a huge tax advantage. Again, the biggest thing I see is just kind of owning the assets as opposed to, well, here's my cell phone and I'm going to ascribe half of it to my life and half of it to my business. It's easier if the business owns a separate phone and just pays for all of it. I think it's easier from a tax standpoint to do it that way. So yeah, so you can ask the brokerage firm whether they can give you any advice. They may decline because they may not want to take on that liability, so you may have to look. You can hunt around. We don't offer them here in the bookstore, but there are a number of books that some agents like that talk all about how to get from nowhere to up to speed, making a living in 6 months, a year, whatever. So Google those kinds of sort of, how do I make a living in real estate books? You may be able to get one on Kindle for $5 or $10 or something like that. And like with any, author-written book, if they've tried it, maybe it's worthwhile information. I don't have a specific book to recommend. I just glanced through those in terms of trying to figure out whether it was ever worth using in a class. I've never actually followed one's advice. Again, I already had S Corp, LLC, K1 type experience before I ever got into real estate, so it didn't seem like a big deal to me. Right? So just be aware of that compensation option. Otherwise, it's all going to just come to you as an individual. Okay, so if you want to get out from your deal, it's pretty simple. You'll have a license, and I'll show you what one of those looks like if I remember to bring it with me when we do chapter 14. But you'll have a actual license which will be held by your sponsoring broker. It will be kept at their place of business. And to be terminated, you just go into them and say, I'm done here, and they sign off on the front of your license. Then meeting all these requirements, that just needs to be mailed to the state along with the fee if you're going to get signed up somewhere else. Make sure if you are going to switch from one firm to another, you've got a new sponsoring broker all lined up. We'll talk about this in more detail later, but if you're not sponsored, you're not licensed. If you're not licensed, you can't do these licensed activities and charge money, etc. So when you do switch from one firm to another, make sure that other managing broker or whomever needs to take you on is in the office so you can go right from one place to the other. So it's fairly easy to switch. I don't know that it's an exact science to get it perfectly right when you're first getting into business. Again, if you like the people that you interview with, and the location seems right, and you like the name, maybe you know somebody else who's there, you see their signs around, you're comfortable you're going to get an adequate amount of business opportunities by being there, and you trust them, and that's probably about as good a place as you're going to go as any. If you have specific things you want to do, this is where planning comes in. Is where we're kind of rolling into this now. You need to start identifying those things that make you unique as a potential sponsored licensee. So some of you have commented you're going to be involved in flipping houses with others or on your own or something similar to that. So if you're going to do transactions, whether you build and list and sell your own house, or whether you are going to buy a house and flip, or whether you're going to buy places and rent them out, or whatever you're going to do, and you want to use your real estate license to do that, and those are licensed activities, so once you're sponsored by somebody, it's probably going to have to, any commissions related to those sales or leases are going to have to run through your broker. The profit of being a builder does not. The profit of being the investor does not. But the commission-related activity would have to. Then you're going to want to talk to them about that ahead of time to make sure you understand how that's going to work and whether that's going to make sense for you being there. So plan what you're going to do. When you interview them, ask them, any special deals if I'm representing myself. Some brokerage firms will say, you can do, we'll let you do one buy side and one sell side a year for yourself at a higher commission split where you keep more of the money, or where you keep all of the money and just cover the expenses. I negotiated a deal when I took over the commercial office I mentioned and managed for 4 years, where everything I was involved in, I just paid the expenses. They didn't pay me a salary, it was all just commission basis. I got a piece of the commissions that went through the office, and on my own deals, wherever I was a principal on any level, including through a corporation, they got nothing out of those deals. And that turned out to be a big number for me. So, that's the kind of thing you gotta negotiate that kind of thing up front. So ask about it. If you're unique or you're unusual, start identifying those things and ask brokers. And if after the first 2 or 3 interviews, they're all like, oh, that's nothing, then you'll know you don't have to ask that anymore. But if they stop and hem and haw and think and maybe even say, I don't think we want to do that, then you'll know, okay, some places are okay with this and some places not. So for me, I knew I wanted to end up doing commercial real estate. That was part of my plan. I can't even tell you why, other than a whim that was whispered inside my head one day, why I even got into residential real estate, or why I even got licensed, really. But I knew as part of that I wanted to do commercial. My life unfolded amazingly well along this line. But when I was interviewing brokers and they were uncomfortable with commercial deals, crossed them off my list. Now, as I mentioned, I think the other night, I grew up in Naperville. I'm one of those rare sort of native Napervillians that you can never find if you're in Naperville. Technically, I lived in Arlington Heights for 1 year, but we'll just ignore that. But I chose not to do brokerage in Naperville. I was living in Aurora, and that wasn't the deal. It wasn't the issue. I probably could have made a lot more money, but I had trouble finding a firm that was comfortable with me doing residential now and on my own going into commercial, because they didn't. The managing broker of the office would constantly say, "I don't know how to do that." So that wasn't for me. I came to Aurora, found a firm based in Aurora. They had a separate commercial office. The broker who was my managing broker for the first year or so was there, had done a little bit of commercial stuff himself. I felt comfortable, they felt comfortable. Before I left that firm, I'd closed a few commercial deals. So that was really important to me. If you got something like that, you need to have it on your list of the questions you ask the managing or sponsoring broker, whoever you talk with, when you interview these firms. All right, let's go ahead and take a break. When we come back, we're going to talk a little bit more about actually having goals and objectives for yourself, because again, this is all what you are doing as it relates to business. Why don't we see if we can be back at 5 till it's about 11 or 12 minutes, and we'll pick up from there.